In today's Money Watch, we're talking about the slowdown in the housing market. Yesterday, the Federal Reserve raised interest rates by another 0.75 of a percentage point as it continues to fight inflation. This comes as mortgage rates hit a 20-year high at just over 7%. And the National Association of Realtors says existing home sales continue to decline. So what does that mean for you? CBS News business analyst Jill Schlesinger joins us now to talk about it. Jill, good morning.
Good morning.
So the rate started out at 3.2% at the start of the year. They're over 7%, incredibly expensive. How's that impacting the real estate market?
Well, it is really spooking a lot of would-be buyers. But let's just kind of review these numbers for a second. Those numbers sound big, but let's make some context. If you were looking at, say, a $400,000 house at the beginning of this year, you had 20% down, you did all your saving, you put that money down, you got yourself a 30-year fixed-rate mortgage. The payment for your principal and interest was about, let's say, almost $1,400. Now, just months later, not even a year later, that same payment is over $2,100 a month. That's an extra $9,000 over the course of a year. And it means that a lot of people who are looking in the housing market have to lower their expectations. And that is where we're seeing a real deceleration in activity.
Do you have an easy explanation on why it's so high?
Well, I mean, look, mortgage rates are high because all interest rates are actually rising. And so that's part of what we've been seeing all year since the Fed started raising interest rates. But the interesting thing also is that actually home prices, they are decelerating, but they're also slowing down some. But they do remain high. Why? Because we don't have a ton of inventory. Right. And I think that's the real issue. Like, you have people who are first-time home buyers who say, I don't want to buy, but there's not so much to buy. So prices are still pretty high. And I think that that's a tough push-pull.
Yesterday, Jill, on this show, it was described in Nancy's piece as a tug-of-war between buyers and sellers. Do you see it that way, and who's going to win?
Well, I think buyers and sellers are both impacted. Let's look at it from the buyer perspective. We're talking about how affordability has really changed. So I'm a buyer. I can't afford as much. So that means I'm stuck in the rental market. We'll get to that in a second, but that's tough. Sellers, meanwhile, you have a lot of people who would think about maybe moving up. But let's say you've got that beautiful house and a 3% mortgage rate. Yeah. Now I don't want to move. And so now I don't have as much inventory. So, okay, now there's lower inventory. It means the market frenzy's dying down. The average price for a median home is dropping. It's not down yet, but it is dropping. And we're that frenzy of bidding over the price of the house. The number of days on the market, it was down in the teens for a number of days. Now it's at 50 days. All of these things really tell us that the home market is shifting. And there is a push-pull between buyers and sellers. It's market by market, but I still think that sellers have an advantage. You know what the thing, if you're selling, don't get stuck in that moment of, oh, I could have gotten this much money a year ago. Deal with today, and if it still makes sense, sell your house.
You mentioned renters. Was there something you were going to add there?
Yes. Okay. So rents, we know, have been rising. And I've been focusing on those younger folks, the 25 to 35-year-olds. And what we've seen is that affordability of rent has really hit that group so much because their annual incomes are not rising enough to catch up with rents. Wow. So the share of their income to rent is rising. Now, here's the weird thing when we look at these markets is that just the fact that rents are so high are probably a sign that will mean that rents will come down because landlords will not have the leverage. If people are saying, you know what, I'm moving back in with mom and dad or I'm going to sleep on Vlad's couch for a while, that's going to help rents come under control.
But Vlad has a nice couch.
Oh, well, that's all are welcome.
Nice couch, but the guest room is going to be a bit...
Yes, I will have an extra occupant in the house starting January.
You always hear there are things that you can do to boost the sale of to boost the attractiveness of your home. Little cosmetic things.
Okay, I want to tell you that there's a great survey out, and it said, what brings you joy of, if you're going to stay in that house? So refinishing hardwood floors and painting are some of the projects that really start to bring you joy. Closets. A lot of people say doing their closets. The strange thing is, a lot of the projects that you think pay off in the long run don't. So, everyone's like, oh, I want to do my kitchen. I want to do my bathroom. Actually, when you look at those projects specifically, you can't recoup the amount of money you spend on those big projects. So just be careful.
I replaced the grout behind my kitchen sink. Personally, myself, the greatest feeling on earth. Greatest feeling on earth.
Wait a second. Does anyone else need some grout redone?
It looks amazing.
Well, you know who to call. Thank
Exactly.
you, Jill.
Thank
Always
you.
good to have you here.